All right, week 33, outlook number one, starting with the pound futures. So, looking here on the 4 hour time frame, what we have is actually continuation of the idea that we discussed earlier. Don't mind the other markings, these are just back testing. But nonetheless, in the current price action, we discussed in week 32 the three different scenarios that were to play out, two of which were bearish, one of which was bullish, and the bullish one is the one that is currently playing out. Now, the bullish scenario that we dictated was based off of the action of mitigation, the structural actions, which were these breaks of structure here that trumped the break of structure moving lower here. We have the failure of continuation following the mitigation of this area of or this inefficient pricing here for sells, and then we got a mitigation of the sponsor candle that was erected following the mitigation of this inefficient pricing. So because of that, we then expected for continuation of price action to the high side, which we are currently in process of getting. And so we also dictated that if we were to get continuation of price action to the high side, the immediate target would be obviously this high that was created before the mitigation or following the creation of the sponsor candle, but the immediate structural high or liquidity point that was of interest would be the high that created this entire sell-off in the first place. And that is exactly what we're moving towards at this very moment. So because of that, we are just looking for continuation of price action to the high side. Now, one other thing to note is the fact that even though we are looking for continuation of bullish price action to the high side, we have to take note of this inefficient pricing here. This inefficient pricing still exists inside of the current quote-unquote price leg, but we want to see if it's valid or not. And what I mean by valid or not is we still apply the same rules because it is a price gap, so to speak, but it's not an area of interest because it's just raw inefficient pricing. It's not a part of any mitigation. We need to assess if this area of interest or if this inefficiency is mitigated properly. And if it is valid, then we have to take note that there could be potential sell-off from here. But it looks like if we're looking at how we mark up this here, it actually is invalidated. So because it's invalidated, I don't care that we had a very strong sell-off from this area because this inefficient pricing, even though it's completely mitigated, it has no strength to it. So in order for price to just full on die here, I would need to see more price action that shows that we are going to move lower, or I need to see more sorry, I need to see more from the price action to pique my interest for looking for selling opportunities. As of right now, these two inefficient pricing objects, which are just raw inefficient pricing, are completely invalidated. So I'm sticking to the bullish bias. And so what we should be looking for is just still continuation towards this high here. A lot was said there. Some of it was probably way too ranty. Succinctly, we have failed inefficiency objects for sells. We're looking for continuation of the bullish scenario to take out this liquidity point here. And depending on the structural action that occurs here, we will be looking for continuation towards the next liquidity point, which are these relatively equal highs that we had marked out all the way over here, which is this high here, and then these two highs. All right. So that is what we are looking for on the pound futures. And let me actually go ahead and clear these because this is no longer relevant. That's not relevant. That's not relevant. Just want to clean up the chart a little bit. We know what we're looking at. We know what we have here. We know that SC is mitigated. I'll keep it on there for now. But yeah, nonetheless, this is what we're looking at. Okay, cool. All right, now for the NASDAQ. Well, we have actually, the liquidity draw seems to be holding where we have the range is still intact. We have not actually, move towards really anywhere outside of the premium, which means that we're just in range bound. We're at the mercy of the raw price action that's currently happening. We do take note that the last action, structural action that occurred inside of this range was this liquidity draw at this liquidity point here in the premium side of the range. And what happened following the response from here was price pulled back, mitigated this inefficient pricing here. So what we should be looking at is if this inefficient pricing holds, we should be looking at opportunities for sells if an inefficiency object, sponsor candle, or price gap presents itself in the coming price action. But as of right now, this is looking pretty promising for continuation of selling price action. We do have mitigation. And so when I say mitigation of this inefficient pricing, some people might see this as a sponsored candle. To me, I don't see it as a sponsored candle. Some people might see it as an order block. If you're following ICT, it is. But for me, I need a little bit more confirmation. So I treat it as just inefficient pricing. And so because this is inefficient pricing, this is the area that I'm looking for. So really 50% to 100% is the area that I consider the inefficient pricing mitigated. Anything above that is just looking for invalidation of the inefficient pricing. And that is solely dependent upon the body of the inefficient pricing first candle. So this purple candle dictates if the body is invalidated or not. And so because the body closes all the way up here, I would need to see price literally just mitigate or go past that body high or the close of that body in order, to invalidate the inefficient pricing. But because we have not reached that body, we have not reached the tip of that body, what we're looking at is validation or still validation of this inefficient pricing. So if we get expansion lower and we have any sort of price gap or sponsor candle created, that will be a valid entry or inefficiency object created for entry for looking for sells. So until then, this liquidity draw still holds. And yeah, we're just looking to see if price action is going to hold. And another thing to look at this, if we're looking at it from the structural base, is the fact that we have, if we're looking at the price action, you can look at it from the stance of highs and lows. What you have here is a low, a high, a low. This is unwillingness, a high that breaks a previous structural point. But really we have like lots of, breaks here, but this is all internal. But this is the one that's meaningful. This is the one that's most meaningful because it's the last high or low that that price tested. So this ended up being a liquidity draw. And so after that liquidity draw, not only that, we have a low to a high, then we have a new low, and now we have unwillingness. And so that unwillingness is coupled to or exists, it's coherent with the mitigation of this inefficient pricing. And so because of that, what we could have is alignment between the structural actions and also the inefficiency objects. The structural action and the inefficiency object for unwillingness to show that we are looking to move lower. But we'll have to see what the price action, what price generates over the coming few candles. All right, so that's that. Now for the Dow Jones, we're just still straight up just in buys here, right? This is just a bullish run. And same thing, it's not really, just look for opportunities. Every pullback is an opportunity to buy. Not really much to say about that. All right, so that is week 33 outlook number 1. Peace.